tryna take it down, placeful. You just scoring mines, best the bar.
All right, ladies and gentlemen, I hope you're having a wonderful weekend, and hopefully you had a great trading week. But as we wrap up, coming here to the end of the week, I want to talk about the biggest threat to the stock market and economy that we have right now, and I'm going to give you guys a little history lesson. So despite all of this concerns with this disease going on and what's happening, we saw the stock market reach new highs. I even thought at the beginning of this week that it was going to get a little bit bumpy, and now we're back here at all-time highs. But I want to give you guys, again, a history lesson to show you something and what it relates to. And I am very, very confident that this is actually the biggest threat to the economy. And I want to show you what happened and give you guys a little background into China's economy and why this is such a serious threat. So a lot of my theories still exist. I will show you guys this. We're going to go over this stuff. You know, why I'm interested in this, you guys could go watch this video I have on this, because last time this stuff happened with China, I had the same exact theory, and it even led me to making 90,000 in one day. And by the course of everything playing out, this is what I have on the chart here. I shorted this and I was able to turn $2,000 into $250,000. Now, is the point of making money on this and that? No, not at all. It is understanding how the market reacts to this type of stuff and why all of this has an economic impact. So I want to go over all of this with you guys and show it to you. So let's get into it. Drop your thumbs up on the video. Make sure you subscribe. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. So hopefully we see you there regardless of what happens in the markets. Keep it updates, free 99, free information, free stock news, free everything. Just be there. All we ask is you're positive and respectful. But let's get a real context here. So this is what happened that caused this. Well, this was the first flash crash in 2015 in August. But now, what does it relate to with China's economy? And this is now the biggest question that I paired with everything happening right now with this virus. The biggest thing that is occurring right now and that a lot of people are missing out is the effect on supply chains and the effect of just the overall Chinese economy. And pretty much up until this day, given that the Chinese economy is stepping in, and that's what they did at the beginning of this week, there has not really been something sufficient enough to defeat communism or this not so invisible hand they have on their economy where they are putting and pushing in all this money. It would take a really big external factor to really have it where a country that controls everything is able to lose control. I even heard some people said they're going to start killing people before they lose money. And again, China takes this seriously. And now this is what happened in 2015. And I really want to make this video now because, and I really want to document this, because even the available data to get, like when I used to look at this chart, even on this website, they're changing it around. You can't even see the daily chart, so you don't really see it as much. It's bunching it all in a week. But what happened here was in 2015. It was August 11th, 2015, August 10th, 11th, is when the Chinese government decided to weaken their currency. Now, this was the first time in over 20 years that they decided to let their currency float against the market value, meaning the government didn't, put and spend all this money to control and keep it on this value. They let it depreciate so it would increase their competitiveness with exports, and it made them a more competitive force. Now, the only reason you do this is if, well, you want to spur activity, and that was what they were doing. We cut rates. We see what they do with repos now. But back then in 2015, when they did this, this was a huge warning sign because, again, it was the first time they did it in 20 years, and this was a last-ditch effort. This was them throwing the kitchen sink, just like we saw them do last Sunday, excuse me. This is where we saw the gap up with the market, the world, and everything, even though China, and now again, too, this is the Shanghai Composite. So this is June 2015. You saw, imagine the S&P going from 2,100 to 4,400, almost, tripling in the span of a few months. That's what happened with China. But then their market started to crash. So when they started doing this was in August, they needed a big move to help spur their economy. And again, why I'm bringing this up and showing you this, because that drop we saw on Monday in China, it was a 7 or 9% drop. And again, they threw so much money at it. That was the biggest one-day drop since the burst of this bubble in 2015. So again, it's correlating here, and that's why I'm bringing this up with the currencies, because now when you see China do extraordinary measures, again, a country that is in control of everything, when they decide to take these measures, it is telling you something about how they feel towards it. Again, this is even my theory with the yield curve. These governments know what's going on. So when they take these measures, it is your job to be able to interpret what they mean. So this was the first time they weakened it, but now this is what I really want to show you guys, and this is where I don't want you guys to get it twisted here. August 11th, look what happened with the S&P. We were still near all-time highs at the moment. There was some volatility prior to that. There was stuff going on with Greece and the Eurozone at the time, and the Greece bailout, if any of you remember. But what happened to the market when they announced that? The market actually gapped up that week. So it gapped up, came down a little bit, and then finished. And one more week went by, then it came up, and then this followed afterwards. So pretty much from August 10th and 11th, all the way up until the 20th, that's when you really started, you had one down day, and then overnight, you had this big gap up. This was like a 400 point move. This was big at the time, considering the scale of the S&P. Then it started to go, but it took about 10 or 11 days. And now that's a little bit different than this situation. And again, even then, China didn't even know about repos back then. Nobody used that, surprisingly. The U.S. did use that. Janet Yellen did use repos here at the lower end to help support our economy, but this is the biggest threat to the economy. This is the biggest threat to the stock market, and you'll see the prices don't always reflect what's happening. So I know a lot of people are like, well, the stock market's up, it's not going to affect us, but that's exactly what they said over here. And the whole logic is we are in a connected system. It is a bunch of dominoes. It is a boat. You do not look at somebody in a boat that's going down and say, haha, your side of the boat is sinking. No, if their side sinks, so does yours. And that is now what I think is the biggest threat happening here. That is why countries around the world even reacted positively, because they're seeing China throw in the kitchen sink, and what I mean by that is China stepping in, putting stimulus. They're stopping people from selling stocks. Well, and how they do that, it's not like they're saying you can't short stocks. They banned borrowing of shares. They're banning futures so that other things don't relax. They're throwing money at the currency to keep it stable. And this is pretty much what's going to happen moving forward. There's going to be two ways that they are able to, or that we're going to find out what's going to happen. It is either going to happen around next week. Again, it'll happen in a 10 to 20 day period where this situation is so bad, which reflects the moves that they make, that it cannot be controlled. And if they do lose stability or they need to do more actions, you could start to see things start to slip up from there. Or it will be highlighted in their currency reserves and a lot of economic data that'll come out 3 months from now, meaning they could get stability. But now once we're able to find out the real cost of that, that's when it's going to go down. But now, why is this an effect to the economy? What does this virus or anything mean? It is simply because if people are not working so far, China missed out on one of their biggest economic holidays, the Chinese Lunar New Year, but now it's so far random, over I think a couple $100 billion so far. Every single day it's closed. Every single day people can't get to work. This is going to cause a big effect. That's why oil has been so important. That is the next factor we talked about that you need to look at, is the price of oil. There's a giant correlation between here, but this is what happened last time, is that when China was in this trouble, and this is now when they weakened the currency, this was to prevent a hard landing. And now that's why when you see China step in, when you see them working with the U.S., again, anytime you've had the currency weaken, you've seen market problems. That's why getting the currency stable has been such an important part of what the regime wants, or what the current administration wants. And because if their currency gets out of line, it messes up for everything. But this is the whole point. Why are we willing to work with China? That's what happened in this January 2016. The currency weakened again. We made the Shanghai Accord. That's what people call it. And then there was the Shanghai Accord Part 2 in the beginning of January. You'll see here, after that big drop in our stock market, October, December, we made another agreement to control currency. That was in end of 2018, coming in 2019. You saw the market go from a low to ripping back up. 2016, following all of this, you see the currency weaken again. Anytime problem, again, same situation happened. So you can see here, that's what I was talking about with 2018. Then we agreed to control the currency, make sure all the supply chains and economic stuff's moving smooth. Everybody on the boat is okay. Come 2015, again, that's the first drop. That's the one I have over here. But what happened that January, when the currency started going crazy again and the problems started to seep through the cracks, you saw it happen until the United States and China agreed to stabilize the currencies, because if that got out of whack, pretty much China is in a very vulnerable state right now. And that has been the talk since 2015. But again, they have so much control. There has not been anything remotely strong enough to make them lose this control on the economy. That is the benefits of the system that they run. But now this is an external factor where people can't go to work, where now, again, they're even saying Apple is going to try to open up stores in this weekend and all that. Most of these effects are going to take 2 to 4 weeks, if not 3 to 6 months, to really, really fully affect. But within the next 2 to 4 weeks from here, we can start to really gauge what's happening, if it's getting better or worse. And then again, how much is this costing? But this is the biggest threat to the economy right now. This is what happens with China. And it is, how long does it take? Doesn't matter, again, if the virus comes here or anything. It is, how long does China take to get this under control and begin economic output? And then the next question is, how much is it going to cost China? What are they going to have to do to get it there? Or will they even be able to control this in general? If not, again, you're going to see other people step in, but this is just one of the only factors outside of their control. And again, you guys see what I'm talking about. There's a huge history behind this. I'm fascinated with this stuff. Again, I'm interested in for economic reasons, my own portfolio reasons, all that. You don't want to panic or anything like that, but now I'm keeping you guys up to date so you could just follow along with this and pay attention. You'll see how markets could still hit all-time highs. That 818, just days before it dropped, the market is near all-time highs, and people were not, people were writing off China devaluing. People at one point in 2015, Jim Cramer, the whole world used to think China. At 2015, we thought it was China's problem and not our problem. Again, they had their big stock market bubble. It dropped. And again, it dropped for months before, from capping out in June to us reacting end of August. And again, you see what happened to their economy, but now look where their market is now. And that's why any big drops in this economy for China is going to be very, very important. Again, if you even take a look, when we started dropping in October 2018, again, you could see where we were. We were at a low and the economy kept going. Then they bounced it up. So wherever we go with China, China is pretty much, again, related to oil and everything. They're the linchpin of demand, keeping the global economy up right now. So if China does fail, it inevitably has an effect on every single economic actor and economy. The degree and scale, that depends, but this is one of those external factors that now, even if it sets into oil, I don't know if you guys remember my video on the CFDs, or excuse me, the CDOs, the collateralized debt obligations. Those are all concentrated in energy and oil. So now if the biggest demand for oil drops, then we have a problem with that. And then you have the biggest bonds holdings in energy. And then it leads to a whole mess with both financing, all that. But this is an external factor, whereas without any of these other factors, the system is fine. The system's okay. But this is one of those external things that is very, very hard to control, and it is going to have an effect. But what I am saying is it is going to take time. The question is how long, and that's what we need to observe. And then also, if it does get back into control, there's going to be a monster bounce. So it goes both ways. I want you guys to understand the economics. I do not want anybody to panic. I'm not trying to be a tinfoil or anything. This is actual global macroeconomics and what is happening. So I hope you guys enjoy. I hope you have a wonderful weekend. Let me know if you got any other video suggestions. Be blessed. Go do something positive this month, man. Go stand up for somebody. That's what we ask here at The Cult. I love all of you. God bless you and have a wonderful weekend.